What's up, everyone? In this video, I'm going to be teaching you about the basics of price action. So this is very important in your continuation of your Forex journey. Now, what the price action is, basically the way the market's moving and the reasons why it's moving the way it is. And there's a lot more in it that you're going to learn throughout this video, but that's just the basis here. So let's get started. I want to thank you for being here. You're going to learn a lot in this video, and this video is fun because we get to learn how the market moves, why it moves the way it moves, and this stuff is important in your continuation in this journey. So let's get started here. Now, what is price action? Price action is a methodology of trading that relies on historical prices. So what this means is price action is basically looking in the past, okay, and recognizing patterns that has happened in the past in the market and then putting it into the future of what could potentially happen in the market based on the past. Now, unlike indicators, fundamentals, or algorithm, price action tells you what the market is doing, okay? And not what you think it should be doing based off an indicator. Now, this isn't the holy grail, but if you devote your time to learning price action, it's gonna help you so much in improving your trading, and it's definitely needed if you want to succeed in this industry. Now, here's what you're going to discover in this video. You're going to learn about support and resistance. Now, we'll have a full video on support and resistance, but I'm going to give you the basics of that because it's something you need to know and just get ingrained in your head a little bit. Market behavior secrets, why the market does specific things that you might not have heard before. And then we have some candlestick patterns, which you'll learn about. And actually, I have created a candlestick pattern PDF for you guys. So what this is just general candlestick patterns that have happened in the market in the past that have better chances of either reversing or continuation in the trend, okay? So I just made a little cheat sheet for you guys. Super cool to have. And to be honest with you, I don't really use candlestick patterns all that much. I do, but not to the extent that some of these people do. But it's good to know what the candlestick patterns are. So, what is support and resistance? This is important. Support is a horizontal area of your chart where you can expect buyers to push price higher. So right here, this is kind of an area of support in here. Price is having a hard time rejecting this area and breaking through it. And what this means is this is an area of importance in the market. So the buyers basically can't break this area of support here, so the market continues in its direction that it was going. Now, resistance is like up here. So if you see the market reversed at the top in this yellow box here, so this is an area of resistance. If you look left, what this is an area in the past. And what I mean by looking left is looking in the past. So when you look left on your chart, you'll see areas of importance in the market where the market rejects certain areas. So support, I think of as the floor, and resistance, I think of as the ceiling. So that's important to know. And like I said, I've got a full video on this. I'm going to teach you how to properly mark up support and resistance. I just want to give you the basics right here so you know what you're getting yourself into. Now, support and resistance can change roles. And what this means is support breaks. So let's say this is a resistance example right here. So we have resistance right here. Market rejected this area twice. Now, the third time when it came up here, it broke this resistance and then continued to broke. Now, when it retraced, what this is called resistance turns into support. Okay, so it broke this area. Now, when you see it come back down right here, this resistance now turns into an area of support and rejects off that way. So you'll learn a lot more about this. That is what support and resistance can do. So in this case, let's say roles were reversed and we have an area of, and we actually do right here. So we have an area of support. If you look left, I know it's hard. If I were to draw a line right here, now it broke through this area of support. Now it came back, retraced. And if I were to draw this line, you'll see that it retraced and touched the resistance. So it was a support turned resistance, okay? It's just the opposite. And again, I'm going to be teaching you a lot more about this because this is important. I get a lot of trade ideas off of moves like this. So the reason why this happens is when the price breaks support, traders who are long are losing money or in drawdown. So when the price rallies back to the support area, this group of traders can now get out of their positions and they break even, okay? So that includes selling pressure, and that's not all because traders who miss the breakout will want to short the markets, which increases the selling pressure. And that's why when support breaks, it tends to become resistance, okay? So it's very awesome. I love support and resistance, and I love support turned resistance, resistance turned support. Now, how to draw support and resistance. Again, we'll have a full video on this, but I want to get this ingrained in your head. So when I'm on my trading view chart, like we've learned about trading view, I zoom out on my chart and I go from a top-down analysis, meaning I go from the weekly chart all the way down to the 15-minute chart, looking for potential areas of support and resistance that matter to me in a time that's close, not anything that's like crazy far away. It's got to be something that is significant in the moment that I'm in now. I'm not trying to mark up my chart and make it all messy and have support and resistance every one of those marked up, because that just makes it really messy. I want it to be significant in the point that or the specific area that I'm looking to trade, okay? Now, we should only be drawing obvious levels. So what this means, if you have to second guess your choice on a support and resistance, because maybe it's kind of, it's got a couple touches of support and resistance, you want to be wary of this because when I'm drawing support and resistance, I want to see at least 3 to 5 touches that is pretty close in the past to where I'm specifically trading in the present. So you just want to be able to mark up your chart and get the correct levels. We'll teach you about that in this next, or one of these next videos. Now, when I'm drawing the support and resistance, you want to get the most amount of touches as you can possibly get. So if I'm drawing a support line and there's an area where the market touched 6 or 7 times, that's an area of support or resistance, okay? That's an important area. Market rejects off of that area. So that's an important area. Now, we have something that's also very important in our strategy. It's called dynamic support and resistance. Now, according to classic technical analysis, support and resistance are horizontal areas on your chart. Now, this is useful for when the market is in range or a weak trend, but it's in strong trending markets, it won't work. And that's where you need to rely on dynamic support and resistance. Now, what the heck is dynamic support and resistance? It means that it's a support and resistance that basically is working off the moving averages. So as you can see here on my chart, I have the 50 moving averages. Now, this is what we call a dynamic support and resistance right here, okay? So we have our 50 moving average, and as you can see, market continually rejects our 50 moving average. 1, 2, Didn't quite touch it there, but pretty close to 4 times. So this is what I would call a dynamic support and resistance right here. And if you notice, again, so this is an area of support. Market came down, broke support level, came back up, and that turned resistance right on a support level. So very cool right there. So how the market really moves. Now, market is always changing. It can be uptrend, which means the market's in a bullish move, which means it's going up. It can be downtrend, which means it's going down. It can range, which means it's going sideways, or it can have really low volatility where it's hardly even moving. So it's just going sideways very small. Or it can have very, very high volatility. And what this means is the market just is jumping back and forth in these big moves. Now, a lot of traders love high volatility. I like high volatility. It's fun at times. You can really catch some really great moves and make a lot of money fast in high volatility markets. Now, the big picture, if you look at the overall picture, you would realize that the market tends to be in 4 different scenarios at all times. We have 4 stages. We have accumulation, advancing stage, distribution stage, and the declining stage. So, stage 1, the accumulation stage. So, the accumulation stage occurs after a decline in price, and it looks like a range market in a downtrend. Here are the things that you should look for. It occurs after price has fallen over the last 5 months or so, and it doesn't necessarily even have to be a time frame. It can be on any time frame where it does this. It looks like a range market with obvious support and resistant areas in a downtrend. The 200-day moving average is usually will flatten out, as you can see up here, this blue line, and price whips back and forth on this level right here. So as you can see, this is our accumulation phase. Market dropped. Now we're not sure. We hit a support level, major support level here. Now what is happening is market's moving sideways and it's accumulating. What's going to be happening next? So in this case, people could be buying, or we could potentially break to another low. So this is accumulation stage. We don't really know what the market's going to do. We would like to see it break back up, but we don't know in this phase. Now, when the price breaks out of resistance in an accumulation stage, that's where it moves to the advancing stage. Now, what we're going to see here is the advancing stage. So, stage number 2, the advancing stage is an uptrend with a series of higher highs. Here are the things to look for. So when this happens, it occurs after the price breaks out of a resistance in an accumulation stage. So right here, we're in accumulation stage. Market is moving sideways. We're in this little zone right here. Now, as you can see, price is having a hard time breaking through this level. Now, after price breaks out of the accumulation stage right here, this is what we call the advancing stage. Now, the advancing stage, what will usually happen is it will go to the next area of resistance in this case before a potential reversal. So after it breaks that level, it's going to go to, normally, not always, the market can trick us, and normally it will go to that next significant level. Now, you see a series of higher highs, and what I mean by that. So the market, and you're going to learn about this a little bit more in this video, but what a higher high would be right here. So this is our first high if you look at this. Now it comes down, makes a higher low. So the market is not making a lower low. If it was making a lower low, it would come below this area in here. But it's making a higher low. It continually makes these higher highs. So this is our third higher high right here. Now it makes a lower high. Fourth higher high right here, another lower high, and now we have reached the advancing stage where we make another higher high, okay? So this is the advancing stage. It means the market's breaking through that accumulation stage and advancing to the next level. So why this is important is because you want to be able to tell what part of what phase the market is in. Now, no market goes up or down forever. This is where stage 3 comes in, okay? So stage 3 is the distribution stage. So this is what we're going through in Bitcoin right now. We're going through the distribution stage where we had our highs, we hit 58, and that might be our high for right now. Right now, we have these people liquidating their purchases, and we're starting to see Bitcoin drop. Now, personally, when I look at the market at Bitcoin right now, I think it's at around 47. It looks like it could drop in the 40s or low 40s. And even if it breaks that level, we could see definite low 30s. Based on what I'm seeing, we have a trend line in the 39 area, 39, 40 area, but going forward, the distribution stage. So the distribution stage occurs after a rise in price, and it looks like a range in the market in an uptrend. So here are the things to look for. It occurs after price has risen over the last specific amount of time. It looks like a range in the market with obvious support and resistant areas in an uptrend. The 200 moving average is flattened out. Price continually whips back and forth, as you can see right here. So this is our distribution stage. Price made its high right here, came back down. Now it made its second high, or its higher high right here, and this is the finishing move probably. Now it came back and it's just ranging, going sideways. Now this will happen after big moves, often for quite a while. What will happen is we're in our distribution stage, which means we're trying to figure out which way the market's if it's gonna continue and go to the next advancing stage, or if it's going to start melting, okay? So at this point, the market is still in its equilibrium with both buyers and sellers on equal footing. So we don't know what's gonna happen in this. However, the tide is turned if price breaks below support, that's where we find the last final stage. So when the market either breaks to the low, which would break that support, or it breaks to the high, which would break that resistance, that's generally telling us which way the market's going to either continue or it's going to continue to drop. Very important. Now, stage 4, the declining stage. This is cool. So the declining stage is a downtrend with a series of lower highs and lower lows. So here are the things to look for. It occurs after price breaks out of support area in a distribution stage. So we have our distribution stage. Market rose for a long time. Now we started moving sideways. Now we have price rejecting this area right here. Continually rejects it twice. We finally broke through. We had a little struggle breaking through this area right here, finally broke through. Now, what do we have? We have our support right here. We have this retracement. Now it's going to come up, and our support is going to turn into resistance right off the 50 moving average, which could have been a really great sell. And as you can see, it whipped down like crazy. So that's the breakout of the distribution stage right here. If you have trouble trying to identify the trend, I'm going to be doing another video on this specifically, so that people can really get a great idea of how the market specifically moves on a day-to-day basis on each time frame. So you will be seeing a video on that later. But for right now, this is all you really need to know. It's still a lot of information. In the next video that I do on this, I'm just going to be going over it more because it's something that maybe is hard to see at first. A lot of people tend to overlook things in the market that I see all the time. And it's so funny because I'll have people send me a chart that they have, and I'll be like, dude, what are you doing? It just broke the trend line on the 4-hour time frame, and they'll be in the opposite direction that they should be in the market because they didn't look at the overall picture of the market. It's just stuff like that can really change your whole trading career, is just overlooking the whole market. Now, what's the point of learning the 4 stages? So here's the thing. If you recognize the current stages of the market, then you can put it to use with our trading strategy. Here's how. If the market is in an advancing stage, then you want to be a buyer. So if it broke that area of resistance, now we want to be looking for buys because we know the price is most likely going to go to that next area of resistance. Now, if the market is in an advancing stage, then this means you can look to buy breakouts or pullbacks. Now, we, in this strategy, buy pullbacks or sell pullbacks. Now, if the market is in a distribution stage, then you know there's a huge potential to the downside. If the price breaks below the support, this means you can look to short the breakdown of support or wait for the breakdown to occur. Then sell on the pullback. Enter these types of trades with our strategy. It's very simple. So this, I can't tell exactly if this would have been a perfect setup. It truthfully looks like it because it's a 50 moving average. I'm sure it's about a 61.8 fib retracement. Looks like we have a potential trend line, but we have that support turned resistance. So this could have been a really great trade. And we would have known that based on everything that's going on in this chart right here. It's very easy to detect. And I know that what I just said was like, whoa, might have went over your head, but you're going to learn about all this in these videos. So high probability trading setups. So we have market structure. Once you can identify the market structure, then you'll trade along the path of least resistance. So we learn the market structure. For example, if the market is in an uptrend, you look to buy only. If the market is in a downtrend, you look to sell only. If the market is in a range, you look to potentially buy and sell off those ranging areas. Now we have areas of value. Well, you want to trade from an area of value so you can buy low, sell high. So we want to get good entries. So if it's an area of value where the market can potentially reverse, that's where we want to be in our potential trades. Now, when I'm doing this, I'm looking for support and resistance, respected moving averages, trend lines, hidden divergence, shark fin divergence, and Fibonacci levels. Now, hidden divergence, shark fin, all these you're going to learn about. There'll be separate videos on it, but these are potential areas of value in the market. And again, you will learn. It's going to be fun. Now, identifying market structure here. So once you identify the overall trend, you can start looking for possible entry triggers. Now, on the chart below, we can identify that this is an uptrend. Therefore, we only want to be looking for possible buys. Now, how we can detect that this is an uptrend. So like I said earlier in the video, we have our low here, we have our high. Now, we're making a higher low because this low is not as low as the low to the left. Now, we come back up, make another higher high, which means this high is higher than this high right here. Now, if I were to draw an area of resistance right here, this area would obviously be rejected on our chart, which is very good to know. So then we come down, make another higher low. So this high, right, or this low right here is not as low as the low to the left. So it's a higher low. This is very important. When you're identifying or looking at charts, you should be able to label the charts like this, both in an uptrend and a downtrend. So you guys should get the point. So it continually makes the higher lows and continually makes the higher highs, which is indicating to us that we are in an uptrend. Now, it's very important to know these because we, in our strategy, trade a lot of the higher lows or the lower highs, which would be the opposite of higher lows. Now, identifying market structure, now that we know the overall trend, we can start looking for buying triggers. Right now, in the example below, there are 3 reasons why this would be a good entry. 1, we broke resistance and waited for a retest. 2, price came down to resistance and is now turned into a support. So right here, this blue line is resistance. Now it broke that resistance area, came back down. We're on a dynamic trend line right here. We're on a resistance, turn support, and market rallies off that area. Now, these are a lot of the moves that we will be taking in our strategy, but there are guidelines to the ones that you should be taking and the ones that you shouldn't be taking. So it gets really fun. Now, we have the 4 solid reasons, like I just explained, why this would have been a good trading setup. We have that trend line, we have the 50 moving average, we have the resistance turn support, probably a Fibonacci level, just so many different confirmations into why that would have been a good trade. And obviously it rallied like crazy. Now, how to identify strength and weakness in the markets so you don't get caught on the wrong side. This is a pretty cool little tip. Notice how large these candles are right here. So a trending move is the stronger leg of the trend. You'll notice larger body candles right in here. So notice how these candles are moving. Even down here, big candles, long bodied, which means we have a lot of momentum to the upside right here. Now, as you can see, we have an area of where buyers and sellers are kind of having a hard time figuring out what's going to happen here. So it's moving sideways. We have not a lot of seller pressure in this. As you can see, we don't have a lot of large red candles in here, which means we don't have a lot of selling pressure. Now we rock it up, and we have these massive bodied candles, which means we have all that momentum of the buyers going in that market. So in an instance like this, you kind of have to watch on the higher time frames to where that potential reversal could be. Okay, so when there's a breakout on the lower time frames, I'm looking for areas of importance on the higher time frames where the market might reverse. Now our retracing move is the weaker leg of the trend, like I was just saying. You'll notice small bodied candles in here, and that move is otherwise known as a counter trend move. So if you sell this move right here, this would be considered a counter trend move, which means you're kind of resisting what's really going on in the market and you're selling in an uptrend. So yes, do I do this on occasion? Yes, I do, because I know specific areas and exits in the trades that I should be in, okay? So this is important, and we also have so many things to protect us within this strategy. But why is this important? Because in a healthy trend, you'll expect to see a trending move, like a big trending move followed by a retracement move. So when the trend is getting weak, the retracement move no longer has small bodied candles, but larger ones. This tells us that opposing pressure is stepping in. So for example, right in here, we have these large bodied candles. Now, up here, you start to see the large bodied candles of bullish. So the people that are selling the market, large bodied candles in here. What this is indicating to us that we have selling pressure. People in the market are starting to sell off of this level in here. So we can either get another high or a double top, which means the market will come back to the current or the previous high, and then we'll see the market tank after that. Or, you know, there's just so many different scenarios, but that is something that's a really good tip that I like to use. If you watch at what the body of the candles are doing, it can really help you in either projecting if we're going to be in a specific bull run or a specific bear run, okay? So that's important. Now, this video gave you like the basics, but there was a lot of information compact in this video. So if you have any questions, right now I'm trying to bust out this course and get all the videos up so that you guys can have the whole grasp of the market. Now later on, after all the videos are posted, we will be doing webinars, we'll be doing all sorts of stuff that is going to just teach you more about the basics of this type of stuff. And yes, I will screen record and I will be posting those webinars on my YouTube. But anyways, like I said, you learned a lot in this video. Make sure that you go back, take notes. Now see if you can start to identify these specific things in the market. See if you can do the higher highs, higher lows, lower highs. See if you can get that marked off. Just practice with that. Now, if you're super confused, you're gonna learn a lot more throughout these videos. So I think it's just all gonna come together. You're learning a lot of information really fast, but we're gonna get it all down. You guys will be good to go. Anyways, if you have any questions, please comment below, smash that like button, and follow me on Instagram. Look at my website, tradersociety.com. There's a lot of information on there. I'm going to start posting a ton of blogs, and I got just tons of good information coming out. I've got a video of my trade recaps for the last month. It's going to get fun. So again, if you like what you're watching, subscribe, comment below, and we're gonna see you in this next video. I'm super excited. Let's go.
Be pulling up. Remember they said I'm not good enough. I took all the energy, turned it to greatness. Now look at my life, man, it's looking amazing.